clearly, as we saw in the first half of the year, that you really can't afford to take a big macro view and talk of synchronized recoveries, and which was very popular at the beginning of the year in terms of putting interest rate steepening curve trades on, or looking for some rapid appreciation in some of the more cyclical currencies and commodity currencies. That hasn't worked so much in the emerging market space in addition. So what we're more focused on is more on the relative value side, the idiosyncratic stories. So we'd expect, for instance, the Singapore dollar to outperform in relative terms to, let's say, the Chinese renminbi, or even the Aussie dollar as the reopening starts to gather pace in Singapore. We'd expect the Chinese renminbi, by contrast, to underperform, partly due to the monetary easing that we're expecting to come down to pipe. So we expect dollar renminbi to end the third quarter at 6.55 and to end the fourth quarter at 6.6 against the US dollar. That said, we're more optimistic on the Indian rupee, partly because of the carry trade there. We think the carry yield is still attractive. It's been a difficult trade for the past couple of months, but by virtue of that, we think some of that long positioning, carry trade positioning, has been cleared out. And so the positioning is a lot clearer for being long on the Indian rupee carry trade from that perspective. And obviously, the growth numbers last night were more or less in line with consensus, slightly shy, but nonetheless suggesting there is an underlying resiliency to the Indian economy as well.
Yeah, what did you make of that big spike in growth, in a quarter which was really scarred by that deadly COVID wave? And yeah, under the hood, I think there's still a lot of recovery left. But do you think India is on track?
Yes, I think, the economy continues to be very dynamic. I think we're obviously talking about a very large, broad, diversified economy. To some extent, maybe not so dependent on the global export cycle, but domestic demand is still resilient. And, the Reserve Bank of India is doing its best, together with the government, to provide as much policy support to the economy as possible. And you clearly see that as well with the bond curve being so steep as it is. And to the effect that the governor as well is still looking at trying to drain some of the excessive liquidity going forward. So that does suggest that the policy is ample and it is providing support to the underlying economy as we go forward.